So you've also got to think about wealth preservation, and wealth preservation comes with diversification, but also understanding the overall volatility of your portfolio and also the overall liquidity profile of your portfolio, because you do have huge amounts of volatility at the individual coin level, and there is a large correlation between the different coins.
Hey guys, welcome to the Human and Machine Crypto channel, where we talk to the teams developing some of the hottest technologies in the blockchain space around the world. I'm Kenny, aka The Brain, who harnesses the creative power to accelerate the blockchain ecosystem each and every day. I'm your host for today, and with me, Amapreet Singh, COO from Onchain Custodian. Onchain Custodian is a regulated, compliant, and insured custody solution enabling institution adoption of digital assets. We also have Lucas Kiely, CIO from Yield App. Yield App is a digital wealth management platform accessible to users around the globe. These are our two special guests here today, both extremely knowledgeable in the crypto ecosystem as well as investments. For those of you who are watching, be sure to hit the like button, subscribe, and to share our content, because we have lots of amazing panels and interviews coming up. Today, we'll go over how to build a secure and growing crypto portfolio. So let's start off with Amapreet Singh, the COO of Onchain Custodian. Could you kindly introduce yourself? Give us about 1 minute of your background and how you got into the industry.
Sure. First of all, thanks, Kenny. Thanks for having me here. So I come from a very traditional corporate background. I was APOC, Asia Pacific Operations Manager for Microsoft. Before that, economist for the World Bank. By educational training, I'm a computer science engineer, but I have MBA in finance and master's in economics. So as you can see, a perfect marriage of finance and technology, what we call fintech. When I was at Microsoft, I was exploring different technologies, and one day I was exploring something called blockchain. This was many years back, before the boom and bust of ICOs and what have you. Yeah, I went down the rabbit hole. I went too down, and I took a leap of faith and then I went into blockchain world completely. Yeah, did a few projects, had a few successful exits, saw some failures as well, a couple of boom and busts along the way. And long story short, then I joined Onchain Custodian as a COO because I wanted to work with a regulated firm, which is backed by the likes of Sequoia Capital and have good sister companies. So basically, wanted to enable right adoption of institutions to digital assets. I'll stop here, but this was a brief summary of my background and so on. Yeah.
Okay. Lucas Kiely, the CIO of Yield App. So could you give us a minute about your background, how you got into the industry, and of course about yourself?
Yeah, thanks, Kenny, and thanks for having me on. Background. I think this is my third career. So I started, I originally I read biochemistry at Oxford as an undergrad, but didn't really do much biochemistry and spent a lot of time writing code and being a software engineer. This is back in the days when Mosaic browser was just coming out, and we were using Lynx browsers to surf the web. So, you had to be a little bit up to speed on Perl and, HTML 1.0, etc. And then I left Oxford to go and be a software engineer at Bankers Trust, an investment bank, and I spent 5 years writing code for some of Wall Street's biggest banks, writing risk and trading systems, specializing in derivatives, fixed income and equity derivative strategies. Left that to go and write auctions and hotel and restaurant booking systems for lastminute.com. In the .com boom, we IPO'd early 2000, and then I set up I actually became a head of e-commerce at UBS to build an affluent customer private bank, like a full pan-European private bank with full research and trading and portfolio management systems. Left there to set up a fintech to do exactly that, which we sold in 2003. And I went to become a trader at UBS again, where I spent the next 15 years writing and developing trading engines and managing exotic derivatives for, Switzerland's two biggest Swiss banks, UBS and Credit Suisse. Left that in 2016 to set up my own macro hedge fund. In 2019, I joined Diginex. and was CIO at Diginex. Obviously, they're a Nasdaq listed company with a whole range of products. And then this year, I joined Tim and Justin at Yield to manage the portfolio there, and that brings me to my current role as CIO at Yield.
Okay, great. So today we'll go over how to build a secure and growing crypto portfolio. So I would like to ask each of you, starting with Amar, what similarities do you see when it comes to investing in traditional assets as well as crypto?
It's tricky because it's similar, yet it's not similar, right? So what do I mean by that? So basically, the fundamentals of business do not change. Yeah. If you're a startup, 90% of startups still fail, which do not have the foundations of fundamental. And when I talk about fundamentals, the teams, the co-founders, the backings, which target audience you're going after. So just because, and especially in the crypto world, just because we see some players raising 10, 20, $30 million just like that, doesn't mean that ensures success, right? So when you're building your portfolio, you've got to see some of these parameters, the fundamentals. On top of it, the way I see how it's structured, right? One is digital assets and one is digitization of assets. Yeah? So digital assets, I personally believe that it will become just another asset class in the already existing asset classes in the traditional finance world, like equities, fixed income, commodities, and what have you. It will come under the same umbrella of regulations, the same access, the same instruments like ETFs, derivatives will be provided in that space as well. So that's how I see it will be similar to the traditional finance world. And digitization of assets is something where we dive into digitization of current asset classes, right? It can be securities, fixed income, equities. What do I mean by that? Let's say tokenization of Apple stock. Yeah. So $10 of Apple stock can be interchanged to $10 of coin backed by gold, can be interchanged to $10 of coin backed by Bitcoin. So just interoperability between asset classes. Yeah. So these are some similarities, and this is how I see industry will be converging and how we'll be moving forward with investments. And if you want to look ahead of curve in terms of building a portfolio and so on. Yeah.
Okay, Lucas Kiely, how about yourself? What similarities do you see in investing in traditional assets and crypto?
To be honest, I look at them, pretty agnostically. I think every asset has a set of characteristics. It's got a liquidity profile, it's got a volatility, it's got a trading session. It also has pockets of liquidity where you can actually get positioned, etc. A lot of the strategies around crypto are new. There's stuff that I've seen in EMFX or niche energy markets that have essentially been the same strategies deployed throughout a lot of the crypto strategies, especially the alpha generation liquid strategies. The flip sets trade 24/7, 365. So, a 1% vol in traditional assets is a 1% move in traditional assets is usually about 16 vol. A 1% move in crypto is about 19 volts. You get these different nuances around the asset class, and then you sort of look at it about the biggest difference I find in traditional assets versus crypto assets is there's a credit ecosystem in traditional that doesn't really exist in crypto assets. So I think the biggest thing that holds crypto back is the lack of a credit market around crypto with cross-collateralization, etc. I mean, it's coming, but you've got to realize that in most traditional assets, there's an exchange that sits in between every transaction. Whereas in digital assets, there's an exchange that facilitates every transaction, but essentially doesn't sort of intermediate between those or those counterparties. So you essentially create this credit risk. So when you have this cross-collateralization or other things that you're trying to achieve, you don't get the efficiencies that you would have in traditional assets despite its digital nature. So that would be my response.
Well, you mentioned earlier that there is obviously similarities between traditional as well as crypto investments. Are you able to apply similar investment strategies in crypto?
I mean, what's the most basic investment strategy you would see is arbitrage, right? Arbitrage exists when markets are inefficient. There's huge arbitrage opportunities in crypto assets, be it futures versus spot basis, be it venue arbitrage, etc. A lot of that stuff is a function of credit and liquidity. And in traditional assets, I used to trade, index arb, index futures versus index spot. Venue arb kind of died as machines sort of took over that, so you can't really do the Nick Leeson, Singapore, Tokyo, Nikkei trades anymore, right? They don't exist, but they used to exist, right? But they do exist in crypto, where you can say, well, I'm going to trade Bitcoin on these two venues and do venue arb. But yeah, I mean, there's a lot of similarities in the way these markets evolve, for sure.
I'd also like to add, and I'd like to take a step back from the financial world, right? So when we talk about investments and building a portfolio, something as basic as what you choose, what allocation you give to what, right? So the similarities, when I talk about that in my portfolio, it will be something similar, such as I still want those blue chip companies. Yeah. So in the digital asset space, I'll choose which are the blue chip companies I want, which are the Apple, Microsofts of the crypto land. Yeah. It can be your Ethereums, it can be Cardano's, Polkadot, whatever you see.
How many of them would you say? When we talk about blue chip, there's like thousands of different crypto assets, right? Would you say is the top 100, top 50, top 20?
I would pick my 10, 15, and these 10, 15 will revise. Yeah. Why 10, 15? Usually it should be 4 or 5, but this is a very fast moving industry. And there's a lot of complementary features, right? So what Ethereum does, it has limitations, and then you will have Polkadot, which will supplement it and have parachains, and then you will have on top of it Polygon, and then you will have layer 2s. So all these are complementary functions. So if you just pick 1 or 2 blue chips in every function, you're good to go, and they will definitely expand. Yeah. So, and another way of thinking in terms of similarity is when you build a portfolio in the normal world, when you look at blue chips, you look at industries as well. Energy industries, commodities, and financial world and what have you, technology. Yeah. So similarly, if you're building in digital asset space, what is the similarity? You look at the same thing. Which crypto firm or project is disrupting energy? Which one is disrupting technology, the financial world, or the DeFi space, as we call it? So these are all blue chips, but how do you segregate blue chips is going further into industry, segmentations, and so on. This is what I see similar to the normal world here. Old wine in new bottle, as I would call it here.
Okay. How about you, Lucas? How do you identify crypto investments?
There's 2 schools of thought, 3 schools of thought. Right? The first school of thought is, hey, I want to be in crypto because I want the growth or the upside of crypto, and you could do that in just go buy Bitcoin, you could buy options, you could buy leverage, all sorts of ways of getting exposure. But what if you've already got the exposure? Right? If you're already in crypto, and this is a whole different client segment, right? I'm in crypto. What do I do with it now? I'm just sitting here. Do I stick it under my bed? Do I put it in a vault? Do I give it to someone to manage? What do I do with it? And this is where I find it becomes much, much more interesting. So there are strategies, if you own Bitcoin, that will double the value of your Bitcoin, or triple the value of your Bitcoin, and you still hold your Bitcoin. Right? There are strategies that we use in our own organization, like decentralized finance, that can earn you yield or APY on your coins. So those people who kind of already in the ecosystem, what do they do? What are their investment strategies? So we use things like market making, venue arb, basis arb. Essentially, you can provide balance sheet that can essentially a much greater return than just, hey, Bitcoin's up 100% this year, and I've got strategies that make 300% a year, right? On that same Bitcoin, right? You're already in it, so what do you do with it? And then you say, okay, well, what about the diversification, right? Because essentially, when you're trying to build security, and security could be about how do I secure my assets when you're dealing with various securities versus security, how do I secure my wealth, which is about diversification. And this is where the real issues come in with crypto, and I think Amar touched on this, is you need to build a kind of diversified crypto portfolio. The problem is, and this is where I think a lot of people sort of lose sight of the real issue, is there's liquidity problems. So you may be in, Bitcoin, Ethereum, Polkadot, etc., etc. But the different liquidity profiles. So if you need to liquidate $1 billion of Ethereum, it's going to take you a lot longer than it would take you to liquidate $1 billion of Bitcoin, and so on and so forth. So you've also got to think about wealth preservation, and wealth preservation comes with diversification, but also understanding the overall volatility of your portfolio and also the overall liquidity profile of your portfolio, because you do have huge amounts of volatility at the individual coin level, and there is a large correlation between the different coins, so you get this kind of drift that brings crypto higher. But at the same time, you've got to understand that the nuance between the different coins creates that sort of cross-correlation risk that will exist across your portfolio. So for the way I consider building a portfolio is correlation, liquidity, volatility. And that's kind of the main points that I look at. So yeah.
Okay. So for an average investor, how much could they be holding? We're talking about HODL, right? HODLing, Bitcoin, Ethereum, the top cryptos, versus, giving it to an institution, to, like, for example, like Yield App. What would be that ratio for?
So we take at the moment, I think we take BTC and Ethereum, which are obviously the main two, and that's really a lot to do with scalability. Like, what can we scale? What can we really deploy? I've got strategies that we trade the top 25 coins, for example, and that's also, that's sort of spread trading strategy, sort of quant-based strategy. My view is that you probably want to be about, from just purely liquidity alone, you're about 60% BTC, 30% ETH, right? And that would be based on liquidity. The problem is then you have huge concentration risk through your portfolio, which is basically your portfolio is driven by moves in BTC and outsized moves in Ethereum. Right? That essentially becomes this concentrated problem. So when you start to say, okay, I want to scale down on that, if you've got, let's say, $1 million, there's nothing really stopping you being, fully diversified across the top 25 coins. If you have $1 billion, it's probably a little bit more complicated, because if that's the majority of your wealth, that's a too concentrated a position in really illiquid underlying. So once again, it comes down to how much of your actual wealth is deployed. I mean, people say, oh, it's not that liquid, but your house isn't that liquid, right? If people hold illiquid assets, that's not the problem. Art isn't something you can go out next day and say, hey, let me sell this, unless it's obviously an NFT and we're talking something slightly different. But ultimately, what you're trying to get to is a comfort level of risk. And that is really a function of size, liquidity, volatility, and diversification.
Okay, so what's the average return that you guys are generating for the customers making deposits on your platform?
So we're targeting a yield. So we're essentially returning kind of guaranteed investments. And when you have guarantees, you take a lot less risky strategies, right? So a lot of our DeFi, et cetera, is paying 6.5%. We top that with tokens. Obviously, as those pools get compressed, we have some other strategies that essentially top that up. But the majority of our portfolio is in DeFi, and then we have maybe 10, 15% in alternative liquid strategies that use arbitrage, etc., that essentially give us a small buffer to give us the coverage that some of our clients' money is not only safe, but we're able to achieve the returns that we have. It's a little bit of a science, and there's a little bit of a nuance to it. I mean, it's not like I can go out and say, hey, thanks for your money, let's go and lever it up and see how we get to. So, I mean, that's not really what we're about. I mean, it's all about low risk, guaranteed returns. So it's a little bit of a different strategy for people who are already in the ecosystem.
Okay, great. Amar, so what's the problem that your firm, Onchain Custodian, is solving for the crypto industry?
So you're talking about fundamentals in institution adoption, right? So when you talk to any institutions, there is definitely an interest. Wherever there is money, there will be interest, yeah. But if you talk to any high net worth individual as well as institution, even if they want to create a small portfolio, they will not go to 5 exchanges, buy 5 different coins, create 5 different wallets, and store the private keys themselves. It's just too cumbersome of a process for anybody and too risky. If I forget this key, what happens? If I die, what happens here? That's where we as Onchain Custodian were set up 3-4 years back. We want to be a regulated entity in Singapore, regulated by MAS. Yeah. The entire idea was that for you, adoption as institution into crypto will be as simple as opening a bank account here. And all the issues that we are seeing right now, what happens if I die, yeah, who will be my nominees, all taken care of. You fill the entire board resolution, your nominee forms, and so on. So storing a private key, having a hassle of looking for trades at exchanges, even asset management, generating yield, even OTC desk, lending, borrowing, So custodianship kind of becomes a foundation of entire digital bank, because once you have a client storing 10,000 bitcoins with you, he wants to generate yield, or he wants to liquidate, or he wants to stake, or he wants to have credit line at various exchanges, as Lucas rightly mentioned, because it's a very inefficient way that every time a client wants to trade, wants to take his coins out of safety of a custodian, put on an exchange which is vulnerable to hack attacks, because all these assets that we are talking about are very vulnerable to all kinds of hack attacks here. So safety and peace of mind comes first. Even when you're building a portfolio, how safe and secure is your principal? Because if your principal is not secure, forget about interest and anything else here. So we personally foresee in future integration of all these different financial services providers having a back-end engine, which has to be a strong, robust, unhackable, either custodian or infrastructure, or it becomes technology stack, where custodian as a service will go around, and so on. So in a nutshell, what we are trying to solve is we are trying to enable institution adoption of crypto in a right way. By right way, we mean regulated way. At the same time, enabling a lot of features and functionality. And that ties in with what I was saying, that digital assets will become one of the asset classes in the already existing asset classes, and will sit under umbrella of regulations that we currently have. Yeah.
So it seems like a lot of your existing clients are institutions as well as high net worth individuals. Obviously, there's an element of trust, as you mentioned. How would an investor know that depositing their money into Onchain Custodian would be safe?
Yeah, so this is something that we partnered with IBM around 3-4 years ago, and we deployed a solution called IBM HSM Level 4 solution. So HSM is hardware secure module. So just for information, IBM is creator of ATM machine. IBM is creator of magnetic strip that you see on your ATM cards and everything else. If that gets compromised, the entire system that you see around gets compromised. Yeah. But anyways, right now in the crypto industry, nobody in the space has level 4. And this is all thanks to some of our backers who wanted to go all in initially and wanted to invest heavy money because security is our bread and butter. So you wanted to go far ahead of the curve. So we deployed SSM level 4. In order for anybody to get hacked, they have to not only hack our system, but they have to hack all IBM servers across all different locations. And even if they hack everything inside, as soon as they hack, the keys are automatically deleted. So there is nothing inside. So that's why it becomes an unhackable, air-gapped kind of solution. So hop that, and if we need to reactivate the key, we have to go with IBM to IBM servers using a master card. They call it a master card key ceremony. Plug in the key, and then only the keys are again reassigned, and so on. So it's a pretty much, I would like to call it a financial solution, but a technical infrastructure, a complete technology stack that has been built just to solve this problem along with IBM. We have had videos with head of digital infrastructure of IBM explaining difference between level 4, level 3, between HSM, MPC. It gets too technical, but that is something that gives peace of mind to clients that yes, if I want to invest $100 million or $1 billion, or if I'm setting up a crypto fund or whatever, I need to focus on my core business, not on this thing. And then this is kind of taken off their plate. Yeah.
Seems like security and making sure that the firm's doing things the right way. Of course, it's very important for you as well as your clients. What experience are you bringing into Yield app, where you're making sure that the firm is it's being compliant as well as protecting the customer's wealth and their assets extremely securely and growing?
Okay, so the first problem that I think, going back to the original question around the differences between traditional assets and crypto, is that crypto is a bearer security, or let's not call it a security if we don't want to upset certain regulators, but let's say it's a bearer instrument. And bearer instruments are yours if you've got them, right? That's the first problem. So it's like walking into a bank and depositing gold or bearer bonds, etc. So security in those situations are built around trust, right? Why do you believe that your bank is going to protect your money? What things are in place that says, hey, your money's safe with us? Well, it's not, is it? It's maybe guaranteed by the FDIC for about 100 grand or whatever, but it's, you've got $1 million and bank gets robbed, then you've got insurance on 100 grand, right? So that trust comes down from branding and say, I know these guys have got a strong balance sheet, they've got good, and we saw this with the GFC, right? We saw, banks go under. We saw runs on banks and things like that. So you've got to be cognizant of the institution that you work with is sound, and also that there is a fiduciary shield around your assets. So if you're just sort of wiring money here and there, and this is, I always find this amazing, is that if you think about every exchange that all these assets sit on, balance sheet's not there to necessarily support those assets, right? So if that exchange gets hacked, as Amar was saying, does the exchange just fold, file for bankruptcy and good luck? Or is it about they do have a strong balance sheet, they can recover your assets, and they can essentially guarantee that custody? And that to me is the real problem, going back to credit. Without credit in the system, your assets are on exchange, and you're only as secure as your weakest link. So you could do everything you wanted within your own systems to say, hey, our assets are secure, they're in cold storage in a vault somewhere. But if you've got to put that on exchange, they're bearer securities, and the weakest link is actually at the exchange. So really, it comes down to the credit worthiness of the exchange that you're working with. And if you look in traditional world, stock exchanges, etc., have the highest credit ratings because of the guarantees that sit behind and the way those transactions are enabled. Whereas I'm not so sure that exists in the crypto world. So what we have to do in order to make sure that custody and security is top notch is make sure that we work with the absolute best providers in the industry around custody, around asset allocation, around legals, audits, etc. And so we implement a pretty comprehensive governance structure and due diligence process around everything that we deploy client assets to. And that's what I kind of bring from my world in traditional finance, is that I've worked with some of the biggest due diligence and operational governance service providers, and we bring that into our portfolio. So every manager we look at has a pretty thorough and comprehensive DD, not just with does it do what it's 10? We talk to the custodians, we talk to their auditors, we talk to their lawyers, we talk to their fund administrators, we talk to, and just say, is it what you think it is? So we forego a lot of upside opportunity because of our conservative nature in the way we deploy assets. And we're lucky in that we're not trying to get you, triple digit returns because you're already in crypto, right? So we're just saying we're gonna help you earn a return on your assets that is safe, simple, liquid, because you might want your money back tomorrow. So you want your money back tomorrow, okay, it comes out. And I think that's the first challenge, is that when you draw down your capital, how quickly does it come back, right? How easy it is for you to get your money out. And this is where I think it's a kind of a bit of a trial and error in some cases, is you just don't know, depending on how much you want to draw down. So I like to think of a world where I think it's an absolute privilege to manage client money, and I take that responsibility very seriously. So making sure we have best-in-class practice, etc., is what I bring to the table.
So Lucas, what's the vision behind what you're doing now, as well as for the Yield app organization?
I think I'd like to first and foremost build or help build one of the most trusted brands in the crypto arena. I think the thing that completely underpins all financial services is trust. And by building out that trust with our clients and showing that we do take responsibility of their assets seriously, obviously helps us grow as a company. Financial services, especially in crypto, is basically a function of you're good until you fail, right? You're good until you mess something up in a you either get hacked or you do something that's a bit stupid or whatever it is, but you'll never ever get it back. It's the hardest one piece of the puzzle, is how do you win your client trust and how do you maintain and secure that? And then from there, it's about building that diversification and wealth preservation. I believe that the thing that fundamentally underpins wealth management is wealth preservation. So how do I give you the diversification you need to preserve your wealth? how do I give you access to some of the most incredible strategies that exist in this industry, which most people in the 80s, looked at the hedge funds of the world and go, oh, these are great funds. I wish I got into those. And there's some amazing managers out there. And I like to think that I've got access to a lot of those, and our clients can get access to a lot of those as we build out the platform. And so when people think, hey, you're in circles saying, hey, where do you deposit your crypto assets? I would like us to be in the same breath as like a Credit Suisse, a UBS, a Pictet, or a UBP, as someone that you go to manage your wealth. And that's what I'd like to build.
Sure. So, see, the broader vision is to basically transform the entire human economy, the way it works. It's a very big mission that we have undertaken, or we are part of undertaking this mission with our peers in the industry, because we all are gearing towards that here. What do I mean by that? So we can talk about, enabling masses and enabling institutions and doing everything else. Central banks can talk about CBDCs and everything else, but what's the end goal? End goal is that 90% of, let's say, Cambodian population might not have a bank account, but 99% of them will probably have this mobile phone. Yeah. And once you have this kind of marriage between finance and technology and intermingling, that's when you start enabling and transforming human economy on the whole. So now coming back, taking 2 steps back, what are we doing as custodian, right? So first step is the right way of adoption of institutions for digital assets, right? But remember, I said the other side of the coin is also digitization of assets. So if we go 2-5 years further into future, we strongly believe that every asset class will be digitized. And there is a reason for this, be it interoperability between asset classes, be it access to different unbanked people, to different asset classes and what have you. And when that happens, the entire custodian or technology stack is already ready, is what we are building right now, which is 2-3 steps ahead. But a lot of big banks and a lot of big institutions want to jump on this. Yeah. I don't think they will start building these systems from scratch, because they're already sitting on legacy systems which are very hard to change and implement. Yeah? And that's where this entire technology stack comes into play. So whether you are doing custody of digital asset, Bitcoin, Ethereum, whatever, or you're doing custody of digitization of assets, that is Apple token, gold token, what have you, it will be the same infrastructure. And then you can see how it basically acts as a bridge between real world, this world, and kind of helps them get together. So that's what our vision is eventually, and that's what we are getting towards, working towards. From technology stack point of view, there are different layers to it. One is custody as a service. Yeah. But when you talk about blockchain, you're talking about various intricacies in technologies, node hosting, yeah, staking as a service, entire product portfolio management, copy trading, what have you, even credit lines to exchanges. We are in the interim of integrating the top 20 exchanges and credit line on all. So our clients do not have to move assets from the safety of a custody solution.
You mentioned that's happening, that's already in the works, integrating top 20 exchanges.
As we speak, and exchange see the need for it as well, because as I said, either it becomes a complete integrated stack or nothing at all. Yeah. So for banks to jump into it, they want to see the entire stack in place, whether from exchange side or whether from custodian side, whether API enablement, whether credit lines enablement, whether post-trade settlements, everything has to come together and tie in together for this machine to work and move forward. As a custodian, and as I repeat, it's a very foundation of everything, because in digital asset industry, if assets are not safe, we call something technical debt. We keep on accumulating technical debt, and hackers wait for it. They come and bank on this and so on. So if you see the bigger picture is just making sure the infrastructure is built for all this adoption to happen. Without infrastructure, it will all be talks in the air, right? So that's pretty much our vision, transforming human economy via adoption to masses. Yeah. And also, I have to add one more thing. My apologies, is that all of our assets are also insured. Yeah. So even though it's an unhackable solution, client has a peace of mind because we already work with insurance agents and got all of it insured as well. Yeah.
Okay, so just one last question for you guys, starting with Lucas Kiely. Can you tell us more about your team and their background? Some of the key people, let's say.
Yeah, it's quite an interesting one because as you move into sort of crypto digital assets, you're relying a lot more on technologists than you are bankers. Right? You're at the end of the day, right? It all comes back to math and computing. It's just how it is. So our team is pretty strong. So we've got a CEO, Tim Frost, who he co-founded the company. He was at Equibank before. It's not his first rodeo as far as startups and new businesses are concerned. Justin Wright, our COO, is 25 years plus in traditional financial services, and he and I sort of are the ones that are really driving that governance and process innovation within the organization. A lot of people talk about the institutionalization of crypto, and actually what really matters is when the regulators come knocking, and they already start to come knocking, and they look at your processes, you've either implemented what they would have asked for and worked with them along the way, or you're playing catch up. And regulation actually provides a huge barrier to entry. So for me, it's about making sure that we're the other side of that barrier. We've done it, we've got it all in place, AML, KYC, etc., is good. And then on the marketing side, we obviously have phenomenal marketers given the growth of our organisation. I think that they're world class people that work with us. But a lot of what goes on behind the scenes is actually about legals and compliance. And I think a lot of people lose sight of the fact that you have the best technologists, you can have the best traders, you can have the best processes, but at the end of the day, you've got to have the right governance in place. And for me, governance structures, repeatable processes, documentation around operational processes, etc., to me are just as important as the front office side. And just so you know that when I started out in trading and banking in the mid 90s, we would probably have one support, maybe two support back office people for every one front office people. By the time I left that industry, there's probably 7 or 8 back office people for every one front office people as regulation, governance, and processes became paramount, and also trust, right? That trust, going back to that anchor point of finance, which is, do I trust this organization? And I think Amar talks about this as well. It's like, how do you build that security, that level of trust and relationship with your clients? And it takes time. So a lot of our behind the scenes is actually about solving this problem, not just about asset gathering and asset raising, but making sure we have the right processes and governance structures in place. Because when people come and as we've been more successful, we've had those institutions, we've had those family offices come and say, open your books, what does it look like? And they go, oh, okay, we like this. Can we give you some of our capital? And I think they've been really surprised about the level of detail that we've gone into and the processes we've put in place to really, really cover a lot of the questions that would usually only come up in a traditional allocation world. So a lot of our behind the scenes guys and girls are literally working with me on this. Then we have due diligence, like operational due diligence. That's a whole other animal. And that's all operations, fund administration, and working with those kind of things. And then there's the DeFi team. Our DeFi team is obviously strong tech based. They're based in Australia. They've got a phenomenal history in the industry, and that obviously underpins what we do in the DeFi space. So I would say our key skill set is a huge diversification across the board of each person bringing a quality to that business. And I always believe that a team of champions will always lose to a champion team. And I think we can look back in history of the Real Madrid Galacticos versus Ruud Gullit's Barcelona, which obviously at the time was the best team in Europe, and that was once again a champion team versus a team of champions. And I truly believe that we have a champion team here.
Great. How about Amar Singh? Tell us about your team. Tell us about the founders, and
Sure.
Yeah.
So I think our founder in the industry needs no introduction. Yeah, Mr. Da Hong Fei. He's founder of multiple companies who are right now in top 100 or 200 in coin market cap, having multi-billion-dollar market
Which
caps.
company is that? That's
So
yeah.
Neo, which is Ethereum of China initially, and gained a lot of traction and everything else. Open Ocean Financials, Ontology, Alpha One, so on and so forth. So it gives
Ontology
us
would be the blockchain company as well.
correct as well. So there's so Onchain Holdings as a company has taken a lot of these firms, and Mr. Da Hongfei is founder to a lot of these firms as well. So it gives us a lot of peace of mind knowing that we have sister companies just that can just throw resources whenever we need, be it in terms of manpower, engineers, technology, and what have you. Yeah, and kind of have complementary skill set in the crypto industry and so on. Significant market cap. So I'm not going to detail of everyone. But that's our founder. And having such a founder with a clear vision 3-4 years ago that I want to set up a very strict regulated custodian house in Singapore in that jurisdiction from day one. These days, we have a lot of false marketing in digital asset space, right? Especially with clampdown in China or other parts of the world. Overnight, a firm will move to Singapore and will just say, "Oh, we are a Singapore-based company." So basically, audience or targeted audience don't know the history and they don't have time to find out who was where and what happened and whether they are regulated or not. Somebody will have CMS license and they'll say we are regulated custodians. No, you're not. You need to have a PSA license. CMS is a different license. Yeah. So I think we live by our values of trust, honesty, integrity. Yeah. That trickles down from the very foundation of the firm 3-4 years back. Talking of team, we have our MD, our head of business development, Leo Xu, 25 plus banking years experience, 2 successful exit, 1 sold to SoftBank, 1 to Electronic Arts, ex-Credit Suisse, and so on and so forth. Then our head of compliance, Richard Peel, ex-JP Morgan, extensive experience working with regulators, so on. Our CEO, Raymond Chung, partner at KPMG, myself, ex-Microsoft, ex-World Bank, ex-Airbus, successful exits. So these are people who come from traditional corporate world. They understand value of a structure, value of regulations, and how to make something big, have exits. So this dynamic combination, along with combination of our sister companies, resources that we have, and not to forget our tech team, our engine, based in Shanghai as well as Singapore. These are people who have built some of the strongest companies, be it Neo, be it from Ontology. They have been with us for 5, 6, 7 years in crypto industry. That's rare. Yeah? Usually we'll have people with 1 or 2 years experience, 3 years at max. So all in all, that makes us very confident and strong as an engine to move forward as a firm to become number 1 in Asia. We are almost there, and I think probably next talk that we have, we will be there. Yeah, by that time.
Thank you everyone for watching this episode about how to build a secure and growing crypto portfolio. And it was such a wonderful opportunity to invite Lucas Kiely, CIO of Yield App, as well as Amapreet Singh, the COO of Onchain Custodian. Both are extremely knowledgeable within the crypto investment sector. So thank you everyone for coming by. Make sure to press the like button, subscribe, and share our content because we have lots of amazing panels and interviews coming up. Thank you, and until next time.